Okay, I think just about everyone is in for today's session. So yeah, right, let's start for today's session. Hi everyone, my name is Don, and today we'll just be covering topic on navigating market trends. So we'll talk a little bit about how we can use price action to figure out market trends, what are different market trends to look out for, and how things like break of structure and changes in market structure can help you to identify whether the markets are trending, which way it's trending, and stuff like that. All right. So I hope that this is going to be useful for you guys. As always, there is the QR code that is on your screen right now that leads you to our feedback form. If you have any questions that you didn't manage to ask in this session, or if you have things that you would like us to cover and we haven't covered yet, you can scan the QR code that's on your screen and leave it there, and we'll be able to see it, and perhaps we can address them in future sessions. Yeah, and with that, we'll start. There's always a quick disclaimer and a risk warning. So do understand that trading derivatives, which does cover CFDs, contract for differences, does carry significant risk. It's not suitable for all investors. And do understand the risks that you may be taking on if you are already starting on your live trading journey with Vantage. So I'm going to leave this disclaimer on your screen for about a minute or so for you to read it before we continue. Okay, and with that we can continue. Is Vantage does want us to let you guys know that they are having a deposit promotion right now. So this is this quick overview of how deposit bonus works. But do take note that you do have to sign up for a live account and trade with them, sorry, and after you make a deposit. So if you are interested, or it's something that you are used to in live tradings, you can just follow these three simple steps to claim the deposit bonus. You can open a Vantage Live account, opt into the promotion, and then you make your deposit and claim from there. Um, there is also the QR code that is on your screen right now. You should be able to see it. You can scan it in order to get your bonus. Of course, if you didn't have time to catch all of that, you can also visit vantagemarkets.com. Head over to that page, select the deposit bonus promotion, and then make your deposit to your live account to claim your bonus. But yeah, as I've mentioned earlier, this does require you to open a live trading account with Vantage, make a deposit there, and start trading live with your actual capital in terms. So it's something that you're fairly new to. Market is something that you're fairly new to, I think. As always, I always recommend that you start first with a paper trading account or a virtual account. There you can probably get more used to how the markets work, how each of the little intricacies work. You can also use it to test some of the strategies that you may be interested in deploying in the live markets first. See how well they turn out before you actually make a move and a big step into live trading. So if that's something that you're fairly new to, I think it's always good to start off with paper trading account before you make your moves into live trading and trading your actual capital. But of course, if it's something that you are um if it's something that you're used to, you've been live trading for a while now as a retail investor, then yeah, this may be something that you could be interested in, could be something that you might be worth looking at. But again, if it's something that you're fairly new to, do consider just starting off a paper trading account, get used to the markets, test out some of the strategies that you might want to use in your live trading before actually trading live and using your own capital for that and deploying your own capital. Okay. I will leave that on the screen for about a minute or so for anyone that's interested to scan. And then we can start today's session. Okay. Yep. Excuse me. And yeah, let's start on today's session. So today we're talking about navigating market trends. So we'll talk about how you'll be able to identify trending markets as opposed to sideways markets that are not really moving anywhere. And with that, we'll talk a little bit about price action, talk about trends, as well as Fibonacci, right? Using Fibonacci to identify and validate some of the trends that you're looking at, and more importantly, also looking at setups that you could be using. If you're more of the trend following type, this could be interesting for you. And finally, we'll end off the live analysis session. I'll look at, I believe today is gold. Take a look at how gold has been trending. I've done an analysis on this before. We'll just take a look at it again to figure out and see how these sort of techniques and price action can be applied to the live markets right now. And of course, along the way, if you have any questions, feel free to drop it into the comments section. I will be able to see that there, and then we can probably talk and address those questions during the session. Okay. So yeah, let's just get started today. So in terms of price action and figuring out how trending markets work, these are sort of techniques that can be applied to very many different asset classes, right? You can apply them to FX, you can even apply them to stocks, fixed income, what have you, as long as they have a price chart, then essentially you'll be able to apply these techniques to them. It's just a matter of whether market is receptive to that, whether there are a lot of investors or a lot of market participants that also look at price action and also will respond to those. And also it's depending on whether the market is deep and liquid enough to um to have um to have that efficiency and effectiveness for the use of price action strategies. Because at the end of the day, it's more of a technical analysis point of view. You're only looking at price charts and the historical price to help you figure out where the market is trending towards and what at the core of it the market sentiment is like for different groups of investors, right? So yeah, but price action can help you to identify trends. So for example, in a bullish uptrend, what we want to consistently see in this sort of a market trend is consistent successive higher highs and higher lows. So it doesn't matter whether you're looking at it from a line charts point of view or a candlestick charts point of view. What you want to consistently see is your highs and your lows, and then a break of structure towards the high, the BOS high, to create your higher high. And importantly, you don't want your lows to be taken out. You want to consistently see higher lows as well, and that should continue on, right, for as long as the market continues to be trending in that direction. You want to see consistent break of structures towards the high, to create your higher highs and higher lows. This is something that we'll probably see later on in the gold chart, something that I pointed out in the last session also. I don't think it has changed that much since then, so I'll show it to you guys. So yeah, your consistent successive higher highs and higher lows will be important. And then, of course, if you are looking at the flip side, which is the downtrend, then you want to consistently see lower lows and lower highs, right? So you'll see your low, your high, and then now you want to consistently see that break of structure to the low, the BOS low. And then importantly, you don't want to see your highs get taken out as well. So you want to see consistent lower highs and then lower lows from there on and forth. Those are the sort of break of structures that you should be looking out for. The consistent break of structure towards the low indicates that the market is trending sort of bearish. And now it's more downtrend. Again, doesn't matter whether you're looking at the line or a candlestick chart. So you consistently want to see your lower highs and lower lows, which continue to tell you that markets look to be a little bit more bearish at the moment. It's probably looking at more of a downtrend from here on out, unless there's a change in the market structure, right? So these are sort of the two trends that price could be heading towards, right? It could be trending upwards or trending downwards. But sometimes, markets are just not moving anywhere, right? And these are the markets that we call ranging markets that essentially price is just sort of moving sideways. And importantly, it's respecting support and resistance levels, very strong support and resistance levels. So you can think of support and resistance as sort of the floor and the ceiling to price, respectively. And these are probably very strong levels that doesn't seem like price will be able to break out of. And these are levels probably where there's very strong demand or supply, or an area of where a lot of orders are being put at, which is why when price approaches that level, you see a very strong reaction of that level, and it seems as though price isn't able to break beyond that level. It's probably because demand is much more than supply at the level, and that's probably why there's the bounce. And then supply is probably more than demand on the resistance side, which is why there's a reversal. And because of that, those two areas creates a situation where markets are sort of moving sideways. It's just sort of ping-ponging between those levels of support and resistance, right? And that's where you get your markets that are sideways, which can be quite frustrating, especially for trend following traders that want to follow trend where you're not seeing price move much anyway. You're not seeing a very consistent break of structure. All you're seeing is a very strong support and resistance and price respecting those levels. But there are some traders also that trade in between these levels because more or less, if the support and resistance holds, you can expect to see a reaction of that. Some people do play off those levels to make a very small move. And to trade within the ranging market. So that is also possible. But what's important here is also help you identify support and resistance levels and the importance of that, right? Even if you're looking at ranging markets, it's important for you to look at support levels. For example, you see your lows and your highs here, they can be your support and resistance respectively. So your highs, for example, and your lower highs here are consistent resistances. And you want to, because you don't want to see your highs being taken out, you don't want to see resistance being broken above off. That's why you continue to see a bearish downtrend. And the same for supports, so your higher lows in the bullish uptrend, right? So marking out those levels can be very useful for you. And of course, only in ranging markets, that's where you tend to see more of a sideways movement of price, right? But the idea of support resistance can be very useful even in trending markets, ranging markets. So marking them out, I'll show it to you guys a little bit later as well. And hopefully it'll be useful for you guys, right? So with that, we'll talk a little bit about break of structure. So that concept of break of structure does play this pivotal role in recognizing market structure. So that helps you to identify, bullish or bearish. Like I mentioned earlier, the break of structure towards the highs or the lows. And consistently seeing that helps you to identify, whether the market's trending or not. And that break of structure signifies a moment when price action breaks a significant high or low. And if you are expecting trending markets, you want to see break of structures in one direction, and that helps to identify like this is the level where price has broken structure, it's breaking structure towards the downside, for example, and we're seeing more of a bearish trend, or break of structure towards the upside, we're seeing more of a bullish trend. But not just in terms of figuring out market trends that are continuing. You can also use break of structure to identify potential signals of a shift in market structure. So what I mean by that is levels. These are situations where you see very, very big or very obvious break of structures in a direction that's against the trend that you're looking at. So for example, if you're looking at a bullish trend, what you want to see is break of structures towards the high, right? But what if you start to see, or suddenly you see a very strong break of structure towards the low, you see your higher lows being taken out? That could be a signal to you that there is a shift in the market structure, that potentially you may not be looking at more of a bullish trend, you could be looking at more of a bearish trend from here on out. And then the converse is also true in the downtrend. You see break of structures towards the highs, then that could indicate to you that, hey, your market trends could be shifting at the moment. You may not be seeing more of bearish trend from here on out, and then you could be seeing more of a bullish trend. So this break of structure can also it doesn't just signal to you certain trending markets or markets that are trending in one direction. It could also signify a shift in market structure, so a change in the trend from bullish to bearish or bearish to bullish, right? So that is something that you can also take note of. These are also points where you could potentially see reversal patterns, right? So some people also use chart patterns to use chart patterns to identify changes in market structure, but the idea behind it is still very similar around price action, right? So when you see shifts in market structure, you may also see um, certain price action strategies or certain chart patterns coming out. So for example, like head and shoulders, you might see like double tops followed by a break of structure towards the downside, double bottoms, and things like that. These are sort of regular chart patterns that a lot of people might point out and look out for. I think it's what's important. So of course, you need to be able to figure out what's the prevailing market structure. And this can come from not just looking at a price in one dimension in one time frame. You can look at price in many different time frames, from a higher time frame and then zooming down to a lower time frame, multi-time frame analysis. That gives you a better idea of where the market could be trending towards, where we could be looking at markets head towards from here on out. Okay. All right, so I am coming up to the end of my slides. So I'm just going to pause here for a minute or so to see if you guys have any questions. And if you do, you can drop them into the comment section there and I'll be able to see it. No? Okay, we can talk a little bit more about Fibonacci now. So Fibonacci trading is something that can also be useful for helping you to identify trends. I think it's more important when you're looking at support and resistance levels and finding a good setup, a good trade setup to work off of. The idea around Fibonacci trading is the idea of mean reversion, the idea that prices tend to reverse to these naturally set sequences and ratios. In terms of retracement, price just sort of taking a little bit of a breather and retracing a little bit before moving in the same direction. There's also the idea surrounding the fact that there's a lot of institutions as well as retail investors to take a look at Fibonacci in their trading. That results in big orders and buy and sell order blocks that are set at Fibonacci levels. And that's why you may also see areas where there's strong Fibonacci confluence, that there are strong reactions of those levels. That's sort of the reasoning behind it. It's sort of a demand and supply idea, and areas where you tend to see more buy and sell orders coming in at those levels, because that's just plain and simple because there's a lot of people that are looking at those levels, right? So that is the idea behind that. So Fibonacci retracements and extensions. So what are they? They're essentially just horizontal lines, and they are sort of supporting your notion of where support and resistance are likely to occur. And there are many retracement extension levels. Of course, you see on the screen here, the 50 and 100% are not Fibonacci ratios. They're just used for psychological significance. And then there are also very shallow or strong retracements. Which retracement levels you're using? Honestly, it really depends on what sort of strategies that you're looking at, what sort of a trader you are, whether you're a shorter or longer term trader, and what works best for you in that specific pair of asset that you're looking at. There's no one right way to use it, right? It's just trying to figure out areas of where you're supposed to, or where you're likely to see strong support and resistance occur. Okay, so the idea of confluence is to find levels where many retracements and extensions overlap together with horizontal support and resistances. And so yeah, you typically want to look first for your support and resistance levels. Then you zoom into the proper time frame and look for clear moves. And it's important to look for clear moves because you want to find clear moves to figure out where your retracement and extension levels should be based off of. And that's where you try to identify proper Fibonacci levels and find the overlaps for strong levels. Okay, so I'll show you an example of that and how that sort of supports your idea of a more of a trending market. And in this case, it's not really much about finding out what the trend is like. It's more with that trend in mind, how you're gonna be figuring out and finding better setups in order to find high probability trade setups to use, right? So yeah, I am going to pause here again. If you have any questions, you can drop it into the comment section and I'll be able to address them. Nope. Okay. All right, with that, I'm going to quickly move on to our chart for today. So I'm going to be looking at gold. It's a very similar, yeah, it's a very similar setup that I was looking at previously. And I just want to show it to you guys because I think it's a good idea of trending markets. So, for example, I'm just going to move on to the monthly. We can ignore the drawings that are on the screen right now. So you can see on the monthly time frame, it's very clear that gold is very much showing a very bullish move towards the upside. Um, so at least from a multi-time frame analysis, on a higher time frame, you're looking at more of a bullish structure. You for a trend following trader, at least you're looking at more of bullish setups even on the lower time frame, right? But you can see that even on a monthly, there's already this first red candle that probably signifies a little bit of a retracement. So we just want to see, and this is an area of this is an area of great interest because we want to see um, whether there's deeper retracement, very strong retracement, or if it's just price taking a bit of a small breather before moving towards the upside. So if you go into the weekly, it's you can see something that's clearer, and see this move towards the upside, and price sort of hesitates a little bit around here and retraces a little before making that next move towards the next leg towards the upside. And it looks like you see price pulling back a little bit here and then retracing a little bit. So if you're on the daily, um, and I zoom out a little bit, you can see that there's a very clear bullish structure, right? See your lows, your highs, your higher lows, higher highs, consistently, higher highs, higher lows, higher highs. And then you see this strong retracement over here, but it doesn't look like price has, made a very consistent and convincing move towards the downside, right? It looks like price, at least on the higher time frames, is still hesitating. So we're not really sure, and at least for me, it's still a little bit uncertain whether price is um, pulling back to show a deeper retracement, or is it just because price is sort of hesitating a little bit before making a move towards the upside? So I would say right now it looks still to be a little bit more bullish. Demand for gold is still high, especially among central banks. And this uptrend, this trend line is still holds. You can see very closely. There's a little bit of a reaction here twice, and as it comes down to this level, near the 2580 level, you see price has reacted off of that trend line again as well, and that's also an area where we have strong Fibonacci confluence, right? So if you move and see this move towards the upside, prices come back to retest that 61.8% retracement or 78.6% retracement, sorry, which is also in line with that 61.8% extension, as well as a smaller move, that 127.2, this smaller move over here. And that's what we want to see in terms of clear and consistent moves, right? So this leg down is a pretty clear move to me. These legs are also very, very clear. This is a little bit of a hesitation, so it's not the best. But these are very clear moves, right? 1, 2, 3. So yeah, that's what we sort of mean when we say we want to look out clear moves in terms of figuring out where to draw your Fibonacci retracements and extensions. And in the point where many of them converge, that's where you get these levels, these zones where there are very strong Fibonacci confluences, which is also in line with that ascending trend line support. Now, of course, there's no horizontal support, but that ascending trend line support seems to be holding as well for a consistent bullish structure. So I would say still it looks a little bit still looks a bit iffy. Not really very sure whether there's going to be a strong move towards the upside, or price could be retracing a little bit more. But I would say if it holds around this level and consistently breaks above the next two resistances, which is that 2720 and that 2800 level, it looks to be a little bit more bullish, especially at that 2720. There looks like a very strong resistance where price has reacted both at those levels. On a lower time frame, maybe on a 1 hour or 4 hour, you might see this as a double top. Now it just looks like a resistance to me. But if you see that level broken above off of, I would say price probably is going to look a little bit more bullish from here. But of course, if it breaks below that trend line, breaks below this level of strong Fibonacci confluence, I would say it's probably a deeper retracement that's going to happen on gold. Probably maybe the demand for gold to be weaning off, or a stronger US dollar coming into next year could drive that. But yeah, I think it still remains to be seen. It still remains to be seen whether that is going to play out or not. So yeah, that is what we have on gold. I'm gonna pause for a bit. If you guys have any questions or any pairs you want me to take a look at, you can leave it in the comment section and I'll be able to see it. Otherwise, we can also look at an example of, I think, a little bit more of a bearish structure. So you can see also on euro dollar, it looks like it's a little bit bearish. You know, this trend line, although it hasn't been validated yet, this was the level that we were also looking at. There's these two touches over here, but I think another touch will probably make it a little bit more convincing. And again, it's a very similar setup, but also towards the downside. These are levels of very strong Fibonacci confluence near the 1055 level. It's also in line with the descending trend line that has yet to be validated. I would say it looks a little bit more bearish in line with that fundamental thought of the euro being weaker than the dollar in the performance of the euro area versus the US. Yeah, so I think looks like it's probably going to be a little bit more bearish from here. The 1055 level, it should hold. Otherwise, if it breaks above of that, I would say a retracement, a deeper retracement for this bearish setup could be possible. But you know, if that holds, I think it'll probably hit lower to the 1033 level and then continue to make that bearish trend. Yep. Okay, we are coming up to the end of our session. If there are no other further questions, thank you so much for joining us today on today's webinar. As always, the feedback form, the QR code is on your screen. You can scan that and that takes you to our feedback form. I know today's session has been quite a packed one. So if you have any questions that pop up into your mind after the session, you can leave it there. Or if you have things that you would like us to cover, we haven't covered it yet, you can also leave it in the feedback form. We'll be able to see it, and probably we can address those in the next few sessions that I'll be taking. So, yep, wish you guys a happy new year ahead. Thank you so much again for joining me on today's session, and I'll catch you guys in the next session.